Hey everybody, it's Adam Tracy, and in all the talk about tokenization of real world assets, I wanted to focus on commodities, right? You see a lot of, like, in particular metals, like especially gold, right? And so the analysis of how those tokens are treated is very, very important, right? And so you really have like three levels to it, okay? If you were to tokenize gold, let's use gold as the example, sell it, right? The question always becomes, what does the underlying token represent, right? If it's physical gold, okay, and this is like, let's call this sphere one. If it's physical gold, you hold the gold, and my token allows me to redeem that token at any time on demand for the gold, for like the physical delivery of the gold. Then it's called a spot transaction, and it falls outside the ambit of commodities regulation, CFTC, NFA, Commodities Act, etc. Right? Now, Sphere 2 is, in lieu of holding the gold, I'm going to create a synthetic through the use of futures, right? And then, in that case, my token isn't redeemable for gold itself. It's just simply pegged through the use of like a exchange traded commodity future by the price, right? In that case, you are what's deemed to be a commodity interest, and depending on how you are selling and managing that tokenized gold, you're either going to have to, you're basically dealing in derivatives. So you're going to have to register as a FCM, CPO, if it's more of like a fund, or even a swap dealer, right? Again, kind of depends on what the underlying corporate model and profit model is. And then finally, you have what are called like retail transactions. And this is like Sphere 3, and it's probably not likely, but when you sell anything like a commodity on like margin, it's like financed, right? If that's always going to fall under the Commodities Act and require the aforesaid registration and licensing, unless you can deliver the commodity within 28 days, right? Which seems like fairly simple. And you don't see a lot of projects financing the purchase of real world assets, especially like metals. So it's kind of neither here nor there. So really, most commodity based real world asset transactions are going to fall under one, which is the redemption, the spot transaction exemption, right? Basically, like, I want my gold, I get my gold, okay? And that obviously requires you to have the gold. And it's important to note that in all three spheres that I just discussed, irrespective of whether you fall in and out of Commodity Act licensing and registration and governance rules, any sort of manipulation and market manipulation rules do apply, right? So like if you lie, right? If you're not holding the gold, but you say you do, things like that, those are always going to be you're always going to be subject to that. But if you want to operate in a sense where you're selling real world assets tied to a commodity, ideally, or unless you're willing to get a license, you always have to fall under that spot transaction exemption, but you also have to be ready and have a mechanism to deliver the gold or the metal, whatever it is, corn, it could be anything. Okay, so that's obviously the trick. Now, the sale, another thing, the sale of that token, like in a token sale, you have to be very careful because you could also trigger securities laws, right? In the sense that you're selling a token with the elements of how we basically attach to it, right? There is a common interest, there is a profit expectation and the like. And so then you fall into the concept of like, do I need to register? Do I need to have a PPN? Can I only sell to accredited persons? Generally speaking, if it is a spot play, you're basically just selling them gold, right? So it's no different than like going online and buying a gold bar. Okay, now if there's like an enterprise, and I see people who do this like with DAOs, and now you have this common enterprise that's like managing the gold, and it blurs the line, right? And so it's one of those cases where it's just like, keep it simple, stupid, right? And like I know people, you attach it down, it's like, okay, well, good, now it's cool, but you don't need to do it, right? And like that makes it look like a securities offering when you're selling the commodity backed token, right? Just sell it as a spot transaction, avoid all the minutia and documentation that goes in and headaches that go in with the securities offering, and just offer it in the most simplest way possible without this like this governance and this management by other people and all that kind of stuff. Just do it yourself, basically, is what like I would take away from this. So that is real world asset tokenization of commodities and commodity interests in the United States, and what you have to do to avoid what is otherwise somewhat complex registration, which requires like personal licensing at some level, and then also just ongoing reporting, when you can basically avoid that and just do it in the most simplest way possible. But the corollary being to all of it, you have to be able to actually give the token holder their commodity, right? And sometimes the mechanics of that will throw you off because it's not always that easy, right? You know, it's not like if a future expires. Like if a corn future expires, I can go to Kansas City and literally pick up a bushel of corn. That's not the case here. You have to be the one making the delivery. So that's the long and the short. Real world asset, tokenization, commodities. Hit me up, questions, adam@adamtracy.io. Talk to you next time. Cheers.